Inflation is here. Now, here's the question. Is it going to help the economy or hurt the economy? And is it going to help your portfolio, or is your portfolio positioned for inflation, or has it turned its back to inflation? This matters because if you don't recognize where the inflation, I said inflation, you're going to unnecessarily underperform. So what I'm going to do is jump into the price charts and show you where inflation is happening and where you want to start looking to position your portfolio. Hey guys, this is RC Peck with my weekly update. And let's talk about why inflation matters. This is just not you're 70 or 80 years old. It affects all of us. It can affect the economy negative or positively, and it absolutely can affect your portfolio both ways. So why this matters is because it's going to impact everyone's portfolio. So regardless of your age or your income, knowing where inflation is showing up will allow you to participate in these moves. So the first thing I want to do is let me jump over to the price charts. We'll come back to interest rates, but look at this, the Manheim Used Vehicle Index. This is amazing. It is just absolutely skyrocketed after COVID. It did that 30-day drop. I'm going to guess these are month to month. So it dropped pretty significantly for 1 month and just boom, rebound. So this got me thinking, okay, what's going on with the used car market? So I want to look at just some ways to think about the used car market. So here is CarMax, which is a $22 billion seller of cars. And that right there is a new lifetime high. Now, beginning of year to now, that's up about 45%. CarMax is going to outperform Tesla this year. Absolutely. I could see this thing double this year. I mean, it's already almost 250%. And as long as cars stay in tight, there's such a need, they're going to have pricing power. Companies like CarMax are going to have pricing power, and that's what we're seeing in the price charts. Another one is CVNA, which oddly enough is just about Carvana, is just about the same market cap size. Now, what's interesting about Carvana, and I don't know specifically the business models, what I do is look at price charts, and we get our clues from price charts. Look, if Carvana breaks above, and you really don't want to be long Carvana until it breaks and sits above 318. Until that happens, you want to fade and turn your back to Carvana and just watch how CarMax moves higher. So I'm just going to call these the kind of the publicly traded used car market places. So this is a way that you can profit and you can put part of your portfolio. I did a market review, a live market review. I do those on Monday, and I pointed out home builders. XHB is really doing good. Now, I'm not going to spend time on these because I already spent an in-depth amount of time on Monday. You can go back and watch that. But here's another way where inflation, you can get your money on this line, and inflation is happening in builders. So that's another way. Going back to cars, look at the car rental market. Now, this is just one car rental company, Avis Budget Group. But look, year to date-ish, it's up about 130%. Now, this thing probably looked like it was almost going to go out of business. No one traveling the world. Cars are getting hit. I've also heard stories about how rental car prices are just going crazy right now. As the economy does open up, people want their cars and they're doing it. So from an inflationary point of view, it's not as if the inflation is going to hurt the economy opening and people being shut in for 12 or 13 months, that's creating inflation in these services and these goods. To most people, that's what inflation is, right? It's when the cost of goods goes up, when things cost more. Someone in my neighborhood, they're building a house, and I was talking to the general contractor and I asked him, just materials, how much are materials up? He goes, easily 60% across the board on everything. Some things more, some things less. But imagine you're building a house and you thought it was going to cost you $500,000 in materials. Okay, all of a sudden that goes up to $800,000 in materials. I understand not all parts of the country would cost you $500,000, but on the coasts, it could easily cost you that in just materials. And he also said what's also going up is he's having to pay his guys more. So we want to see that too. We want to see the kind of the middle income start getting to higher incomes, higher salaries. That's going to help everyone. So inflation is happening. Okay, so a couple of other things to look at. I just wanted to see, just as fun, how good is the economy doing? So I look at things that people absolutely do not need. And one would be a Harley Davidson motorcycle. And it's looking pretty good. It has some resistance in front of it. I would not consider this a buy yet. It definitely has some resistance around 51. But as far as this, is the economy opening and is inflation going to hurt the economy? No, there is inflation because the economy is opening and opened, depending on where you are in the country and the world. And people are just saying, I want to get out. We didn't have our Christmas vacation or our spring break vacation or our last summer vacation. And people are willing to spend a lot more because they've saved up. One of the things that got the stock market out of the doldrums after World War II is no one spent any money for 10 or 15 years. Everything was saved, and all of a sudden the war ended and people had all this savings to spend, and the economy absolutely did so well. We're in one of those little microcosms right now where, in a way, the last 12 or 13 months, no one really spent a lot of money. And now people are like, hey, I want a lawn, I want a tractor, I want a car, I want a vacation, I want a new refrigerator. My refrigerator broke last week and I went to go get one. And the first thing the guy said was, a lot of them are in back order 4 to 6 months. So it's happening across the board. The other one, talking about just cost of goods going up, is Winnebago. And this is interesting because it's a small company. It's under $3 billion in market cap. But again, this is something that you absolutely don't need to buy. Nowhere do you say you need to have to get this. But again, as the US population is aging, people are, and they are the richest, right? So the baby boomer generation is the richest generation. And they have the $400,000 to get a Winnebago and to go out and travel. Or they may sell their house and say, we're going to live in a Winnebago for the rest of our lives. And that's what we're seeing. We're seeing a lot of mobility. That means gas prices are going to go higher. Let's just throw up West Texas Intermediate crude, which is how the U.S., this is basically the U.S. gas price. And look, it's going higher. There is some resistance it has to get through. Okay, but it is broken through kind of the midpoint of that resistance and it is moving higher. So energy costs are going to go up. And we're seeing this. Let me just bring up CRB. CRB is the commodity index, right? So it's the Reuters Jeffries CRB index. And I'm just looking here. So year to date, it's up about 20%. Again, this is an index. It's the commodity index. It's an index that's been quiet and kind of dead for a long time. Most people buy it through DBC or PDBC. And I've said that if DBC breaks $18, that is a strong signal that prices are going higher, right? Because these are all the like the commodities, right? So this is the grocery store of the world saying, look, these prices are going higher. And that's what we see. We see DBC, what is it up this year? Up about 24%. So it's moving higher. Commodity prices are moving higher. So absolutely inflation is happening. What you want to do is position your portfolio in sectors and symbols and slices and segments where inflation helps, right? So that would be energy, commodities, materials, housing. Talked about that on the live call on Monday. But also too, financials. Financials are loving higher interest rates because they can charge more money. And here's XLF going higher. And there's different ways you can do XLF. You can drill in and find regional banks. You can see regional banks have taken kind of a sideways consolidation here through there. But they are above lifetime highs, and they'd had a big move, and now they're consolidating. And to my brain, it looks like they have just broken out of that sideways trend, and they're going for the move to a new lifetime high. And XLF, the sector, and carry have been kind of switching back and forth. Year to date, KRE, which is regional banks, has actually outperformed XLF, but right now XLF, the sector, is moving higher. YKRE digests the move. And you'll often see that, right? You'll see a subsector kind of speed up, okay? And then it digests that huge move. And that's what KRE is doing right now. But what I'm showing you is places where you can position your portfolio where you can take advantage of these inflationary times. I don't think if someone told you to stare at the yield of the 10-year treasury, I do not think we are going to see inflation in the yield of the 10-year treasury, which is the most important bond product on the planet. And I'll show you what I mean by this by just kind of zooming out here to 15 years. So if you can see here, there's kind of a bounce between that 1.5, let's call it 1.5, and 3%. And right now, the yield on the 10-year treasury is about 1.6-ish%. Huge, huge breakdown. It had a double bottom last year in March and August. And really, it's just right back into that range. So as far as inflation showing up in inflationary type yields, I don't see it. And again, part of that is because the Fed can buy these things up. They can just keep this yield down. And so we're not seeing inflation. I don't think we're going to see inflation in bonds. If you do have to have bonds or you do want bonds, owning TIPS is the way to go. It's something you should definitely look at because it's still a bond. It's an inflation protected bond. And look, this is not an opinion. They are moving higher. The price of TIPS are moving higher. They are going higher. It's not an opinion. They are breaking up and out. They had a little bit of a sidewaysness. So if you do have to be in bonds, or you definitely want to have a portion of your money in bonds, be in the strongest bond. You've probably been taught to be over diversified. Absolute mistake. People are taught to be over diversified. And it's one of the things I teach in my Clarity and Control free course, that over diversification is costing. So guys, thanks so much for being here. If you like this video, please hit the like, ring the bell, do the things that YouTube and Google like, because it makes a difference and I appreciate that. Also too, if you like these videos, you will love the Clarity and Control free course. A couple people told me last week, a couple of the links were broken. They have now been fixed, but just go down into the description and check out Clarity and Control. It's the two things over 23 years of working with people to help them get the control back over the money and the clarity back over the money. Those are the two things I've heard over and over for 2+ decades is I want to have clarity on what is working, what is not working, who I should listen to, how I should listen. People want that clarity. And the other is having the control back over their money. Thanks, guys. I appreciate you being in my world, and I will see you on the next video. Okay, bye.